This is Charles Goddard, and this is a brief intro video to technical analysis or chart reading. Now, we're going to kick off with a debate I find myself in a lot, and that is comparing technical analysis to fundamental analysis. And we're not going to spend a lot of time on this because I've already made up my mind, and you are free to, of course, pursue whatever path you deem proper for you. But I want to point out a couple of things as to why I don't have much use right now for fundamental analysis, and that is the earnings per share, the PEG ratios, all those kinds of things. Whatever comes out of a financial statement can be manipulated by vested interests. The analysts are quite often told what to report, and so on. So unless you've got the jam to go into a company and have them open their books, go around the plants, kick the tires, interview employees, and on, you've got nothing. And so what I'm after by following the chart reading road is pure information. It's the purest information that I and most investors can get our hands on. And in that chart, it's a living, breathing thing. It is a reflection of all the news out there. And it's the reflects the emotional response, the hopes, the fears of all investors. And even the surprises, sometimes there's shadows in the chart, but we're going to deal today only with what we can see on a very basic level. I've got a course coming up, and so I want to give you a little intro as to what we're going to be covering. So let's get started on that and see if we can't get you going on a profitable road for your investing. Let's have a little word about me. There's that handsome devil on the screen in front of you, and down in the corner. How do you like that? There's two of me. I don't know which one you should listen to. But anyway, on the right hand side you can see some of my designations, and they show you that I've spent a lot of time studying the markets and charts and so on. And the element that I think that I bring to the table that most don't is that I also spent in excess of $20,000 in the company of traders as a one-on-one student or in workshops, the sort of fellow that made his living in the famed pits of commodity pits of Chicago. And it was these guys that taught me that for all my book learning, there's a practical aspect to trading, a sort of a common sense thing that needs to be reflected in your trades as well. And I think that's what I bring to my teaching, and it's certainly what I hope to convey to you as we go forward. So let's get on with it. Okay, so here we are with a chart of Apple, and this well-known company, obviously, and this we're going to see what this chart tells us. Now, so the whole idea of this little intro and of the beginner course is if you don't know a stock chart from a burnt biscuit, then you are in the right place, and I'm going to show you how easy it is for you to be able to look at a chart and recognize a few things. So number one, we would start with setup and how you would get your chart to look like this one. And so number one, when we're trading, we're always trading with the trend, and there are a number of definitions for the trend. And in our case, just again to keep things easy, we're going to use moving averages. You've got a green moving average, a blue, and a red. And it's quite simple. If the blue is above the green, then that's an uptrend. If the blue is below the green, that's a downtrend. It doesn't get any easier than that. And we use the red to trigger us into trades in the basic method that I will show you during the course. Okay, what else is this chart telling us? So the vertical lines, they are telling us that where we've got a high in price, it's unmatched by a high in the rate of change, which is in the upper pane, and it is the energy that drives prices. So we've got 2 or 3 examples of that. So let's take a look at one. And here is a high in price, and it is unmatched by a high in the rate of change. Now, that is a warning situation, and the rate of change can go back to acting properly, so we don't want to jump out of a trade because it might be a bit premature. But what we do is, or what I do I should say, is I put a trend line on my chart, and in this case it got a little steep, but that's okay. And if the price crosses that trend line, that's when I'm out, and in this case that would be in that yellow box. Now, so we'll go through a few more definitive rules for you as far as that goes. Don't worry, it doesn't get much more complicated than what I've just demonstrated for you. But this method, once you see it, once you've used it a few times, it is, and first of all, divergence doesn't show up all the time, but when it does and you're in a stock, it can help you get out of a trade in a timely fashion. So this is something well worth knowing and using. All right, let's turn our attention now to the bottom pane, which is the RSI. And a lot of people use this for oversold and overbought readings. I don't really get much value out of that since price can move wildly while showing the same reading. I like to use the RSI to tell me whether there's a bull phase or a bear phase going on as the backdrop to what I'm doing. And basically, if a price is in a bull, the RSI will bounce between 40 and 80, and if it's in a bear, it will bounce between 20 and 60 or 65. And those levels can be made a little more precise by what's going on the chart, and I will show you that. But those readings, you can use them and get going with that. And so in this case, what we've got an area here where the RSI displayed bullish readings as it bounced between 40 and 80, and then it drops down into bear territory, and it bounces, and even at its highest point, it is still around the 60 mark. So here we've got a pretty good indicator that Apple is turning to the bear side of the market, and then it declines back below the 40 again. So our backdrop then would be, well, chances are this thing is in a bear phase, and right here we actually have a short signal, which, don't freak out, we're gonna deal with shorting a little bit, but I know a lot of you don't like the idea of shorting stuff, but it's really something you need to master, since stocks tend to go up 30% of the time, down 30% of the time, and sideways 30% of the time. So if you're not going to go short, you're missing out a big element of the market. But we're just going to deal with the upside for now, and I could show you how to deal with the downside without actually going short. And I've got something that demonstrates that, and what symbols you can use to benefit from the market going down without actually shorting anything and freaking yourself out. All right, so that gives you some idea what's available on this chart, and we will go into things a little more in depth in the course, and hopefully you'll benefit from what you've seen here. So let's move to our startling conclusion. So here we are at the startling conclusion already. As I said, this is just a little introduction. And so what I'm trying to do is get some knowledge into your hands that hopefully will turn you into or improve your trading and investing. Maybe you don't need it. Okay, so thanks for the time and wish you well. But if you feel like there's something here, I'll tell you what happens now. Down below, you're going to see a sign up link, and once you sign up there, you're going to receive some information from me, a couple of little videos explaining things, and a PDF of a trading blog where for all of 2020 I traded that basic method that I'm going to teach you, 5 symbols up and down. You didn't have to short anything, but if the market went down, especially oil, we took advantage of it. And it was recorded day to day on a blog. And the final 4 months, I was able to convert of the blog to a PDF, which I send to you as part of that information. We will also be sending out details of a workshop that's coming up. It will be about an hour or so to an hour and a half, and I'm going to teach you the components that we've gone through today in a little more detail, including the trading method and some of the process such as capital allocation and risk management. Now, once you've taken that course, you will then receive slides of that presentation. You will receive at least a month or more of email support that you can ask me any questions that are still lingering, and you will have a recording of that class, and that class will be live, and it will be scheduled over the last couple of weekends of May. There will be the same time, 4 different days, and you can choose one. There will be a cost, and that will be all detailed for you, and we'll see how that goes. So all you need to do is click the sign up link below, and you'll get all that information. And there's my email address should be kicking around there. If you've got some questions, then drop me a line, and I'll be happy to answer you. So hopefully I'll see you there. And in the meantime, take care of yourselves, and good luck with your trading. Bye now.